The Winklevoss twins, founders of Gemini, are calling out the digital currency group, and Solana is up 50% in a week. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. 2022 was the first year that Bitcoin and Ethereum closed lower than previous cycle highs. Crypto research firm Delphi Digital revealed the gloomy end-of-year price metrics today. They added that the 200-week moving average was also a critical level that has never been broken in previous cycles. The previous cycle high for Bitcoin was 20,000 in December 2017. It fell below this level for the first time in early November as FTX collapsed. Bitcoin has not reclaimed this price zone since. Additionally, Bitcoin is trading well below previous solid price floor indicators, such as the 200-week moving average. This is currently at around 24,400, and Bitcoin is currently 31% below this level, which is also a record low compared to previous cycles. The Ethereum network eclipsed Bitcoin in terms of total transaction volume last year. According to data from Nasdaq and YCharts shared on Reddit yesterday, there were 338% more Ethereum transactions in 2022 at 408 million, with 93 million Bitcoin transactions. The values shown in the charts are in millions of transactions, with the average daily transactions at around 1.1 million for ETH and 255,000 for Bitcoin. The analyst who posted the metric said he was skeptical about people saying that a flippening could happen someday, adding that those who are advocating for that have a reason to do so now. A flippening occurs when one chain surpasses a higher ranking one for the same metric, in this case, transactions and activity. The charts also don't include layer 2 transactions, which would put Ethereum even further ahead of Bitcoin for this metric. The co-founder of crypto exchange Gemini has accused digital currency group CEO Barry Silber of bad faith stall tactics as their respective companies fight over a business disagreement caused by FTX's multi-billion-dollar implosion late last year. Cameron Winklevoss blasted Barry in an open letter posted to Twitter, alleging crypto broker Genesis Global Capital and his parent company DCG owe Gemini's clients $900 million. The letter alleges Gemini has waited word on a repayment agreement for 6 weeks with no response. Barry responded, tweeting that DCG delivered to Genesis and Gemini's advisors a proposal on December 29, 2022, and has not had any response. Winklevoss also accused DCG CEO Barry of using $1.675 billion in money Winklevoss claimed DCG owes Genesis for purposes that helped other DCG ventures instead of repaying Gemini creditors. You took this money, the money of school teachers, to fuel greedy share buybacks, illiquid venture investments, and kamikaze grayscale NAV trades that balloon the fee generation AUM of your trust, all at the expense of creditors and all for your own personal gain, said Cameron. Barry responded, tweeting that DCG did not borrow $1.675 billion from Genesis. He also said that DCG has never missed an interest payment to Genesis and is current on all loans outstanding. DCG does have a $1.1 billion promissory note related to liabilities from Genesis related to the Three Arrows Capital default, and in November, Barry wrote in a note to shareholders that DCG had a roughly $575 million liability to Genesis Global that is due in May. Gemini, which is co-owned by Winklevoss and his twin brother Tyler, paused redemptions on an interest-earning product in mid-November, a week after rival crypto exchange FTX filed for bankruptcy. The product offered investors opportunities to yield as much as 8% interest on their crypto by lending those digital tokens out to Genesis. Winklevoss's letter comes as his company faces major financial headwinds, including a lawsuit against the firm's Earn product, alleging fraud and securities law violation, and a mob of angry Earn customers who have been unable to access their accounts. Winklevoss closed his letter with a plea for the two sides to commit to working together to solve this problem by January 8th. Polygon has started the new year strong on the top 10 most purchased tokens among 500 biggest ETH whales in the last 24 hours. Polygon has overtaken the BNB chain in total and average transaction metrics over the past 30 days. This is a major accomplishment and showcases the strength and success of Polygon as it leads in all EVM chains user adoption. During December, over 1.3 million Polygon-based NFTs were sold on OpenSea, with 15.3 million in volume traded from 116,000 active traders. Polygon also saw a pretty consistent total value locked across the last 3 months in comparison to Avalanche and Solana. Just days after the market cap of Solana decreased by over $1 billion in 7 days, Solana has risen back over the $12 mark, up almost 50% since its bottom on December 30th. From the bottom of this week, Solana's market cap hit $3 billion and now sits at $4.5 billion just a few days later, with the market cap increasing by $500 million in a single hour yesterday. We covered recently how Ethereum founder Vitalik Buterin shared his support for Solana on Twitter, saying he hopes that the community will have the opportunity to flourish after the awful opportunistic money people have exited the blockchain. That may have been part of the initial rise in price, but it seems a meme coin may have also been a big part of it. Of course, this token is called Bonk and has an avatar in the form of a dog. Bonk volumes in the last 24 hours have grown by more than 6,500% and its price by almost 120%. At the same time, the token is starting to be accepted by various marketplaces on Solana as payment, and the Solana Foundation's head of strategy and communications, Austin Federa, admits that he's always loved some dog money. The hype for this will soon pass, so be careful. We don't recommend investing into meme coins, especially after they've done triple-digit growth. Heated exchanges between authorities in the Bahamas and FTX's new management have spilled over into the new year. The Securities Commission of the Bahamas, or the SCB, released a statement yesterday seeking to correct material misstatements by John Ray, who was appointed CEO of FTX following founder Sam Bankman-Fried's resignation in November. In its statement, the SCB took issue with 3 points in particular: Ray's statements challenging its calculation of the value of digital assets transferred into its custody on November 12th. Ray's allegations that the regulator instructed FTX to mint $300 million in new FTT tokens, and a statement suggesting that FTX assets held by the SCB were stolen. The SCB said in its statement that the challenge to its calculations was based on incomplete information, the claims that it instructed FTT minting were unfounded, and the allegations of theft were made without providing any substantial basis for such claims. The SCB said the U.S. debtors' continued lack of diligence when making public statements concerning the commission is disappointing and reflects a cavalier attitude towards the truth and towards the Bahamas that has been displayed by John J. Ray. In an earlier filing, FTX's new management claimed that it had credible evidence that the Bahamian government is responsible for directing unauthorized access to the debtor systems for the purpose of obtaining digital assets of the debtors. Now, all of this debtor and creditor language is a bit confusing, but it boils down to this: the new FTX CEO John J. Ray accusing the Bahamian government of working with Sam and fellow colleagues to mint millions of new tokens for themselves when they still had the chance, as well as the Bahamian government mistaking how much money and assets they've confiscated, which could be thought of as purposely hiding the actual amount of money in collusion with Sam. Litecoin commences 2023 on a successful note despite the protracted bear market causing more than 50% losses for most currencies in 2022. The market concluded the year with a drop of around 53% and Litecoin was no exception. However, this year could be different for Litecoin because the coin appears to have had a great start. The price of Litecoin is about $76, up 8% in the last 7 days. The third Litecoin halving is scheduled for this year, therefore 2023 could be better for Litecoin investors. Because of this, holders of Litecoin are expecting a rally to develop quickly before the price halving anticipated for this July. Following the recent gains, Litecoin is currently the 12th biggest cryptocurrency with a market cap of $5.5 billion. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.